The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 13th day of June. My pleasure to be here Monday through Friday, 11 o'clock till noon. Dow's up 42 at 21,278. S&P's up 365 at 2433. You know, we did see a new all-time high in the Dow today. It's hard to believe that it could do that, but it did. And the comp index is up 17 to 61.92. The VIX is down in the tens again, 10.82. And this is going to be very interesting. The E-mini that you see right now, I have it as a peak C. There's just no other way I've been able to count this. I've tried. I've drawn a semicircle, but let me do something else, because what's really obvious to me is not the semicircle, but the fact that there's a rectangle formation forming between the two candle borders. 2445.75 all-time high 3 days ago, 2414.75 the low 3 days ago, Friday. And what's really important about this is that the MACD is turned down, but is still positive. The stochastic has turned down sharply from the 96, 95% area, still at 80% and good. Everything about this says that we should be starting the consolidation very shortly. At the same time, it is so rare to go to an all-time high, anything, an index, a stock, an all-time high in the daily chart at a C and not a D, E, F, or G. And I can't do anything else but count this as a C at this particular point. So it seems to me that there's still an opportunity. We'll know tomorrow at about 3 o'clock, 4 o'clock, when the Fed makes a statement whether the market can handle it or not. But I'm looking for one more pop to the upside. It doesn't have to go more than 24.46. In the S&P cash, which is up 439, it needs to get above the 24, what was it, 24.46, yeah, 24.4620 level. 24.46.20, that was 6.9, I believe, right? Yeah, so it shouldn't take much to do, but it hasn't done it yet. And that's just part of the way the Chapman wave works. Leg E, I'm calling it, at least for now, on the weekly chart. The what I'd said to subscribers to my opening call is when I sent out the chart for the chart for the E-mini, that it made a peak C and there should be a leg D to the upside. We just got the leg D. We had a bit of a pullback. Hey, the MACD is holding well. Stochastics at 83%. There is still buying pressure. I mean, look at this. Look at the SMHs. The SMHs rallied all the way from the 84.09 level to the 86.40 level, which is where the 86.14 is where the 9-period exponential moving average is. I'm suspecting that somehow or other there's a push just above the 9-period moving average, maybe into the 86.50s, 87.20 area. Doesn't have to be, but I'm thinking that would be it. And then we make an arch formation. And then the SMHs start a much deeper correction. That's the way I'm looking at it right now. Looking at the QQQ series, the Q has made a peak C and has failed at that C at an all-time high in the daily. This is like the S&P. That is so unusual. So what I'm thinking here is that we don't have to go all the way. We can get a peak C1, peak C2, a failure pattern. But at this point, that daily really looks like it took a tumble, and that was really important. It held this moving average right here. I believe that's the 50. Yep, it's a 50-period moving average, and then bounced off it yesterday. Hasn't gone to the 141.05 level, the 9-period moving average. If it can go just a tad above, I'll be very happy. But this peak F in the weekly chart says, you know what, you don't have to make a new high. This is territory where there should be some kind of a pullback. All right. So I'm becoming very cautious on the key indices. Going to the QQQ series, what we're looking at is there's a peak D that was made in the 120-minute chart, very sharp pullback, nice bounce that's occurring, a counter trend bounce, I'm calling it, but that monthly is still in leg C, and that's very bullish looking out. All right, let's go to the IWM. IWM trading at 142.11. Holding very nicely up 80 cents. I think it's going to try to test the 142.90 high that was made on Friday, and that'll test the up channel resistance. I still see individual strength, and my whole thing about being long for subscribers since Wednesday or Thursday, has been to see that there is a test of this long-term trend line towards the 144s. I don't know if we can do it, but that's kind of an objective here that we're trying for. And the 120-minute chart in the IWM needs to go above 142.90 to start leg D in the 120-minute chart. Russell 2000. Okay, let's get to the gold. Gold pulling back. It's down 3 at 1265. It's not a big deal. After all, it took 3 days to get from the low of the 2nd of June at 1261.30 to the high that was made of 1298.80, and it's taken a number of days to pierce that 1, 2, 3, 4. This is the 5th day, and just pierce that low. So it's taken a lot more time. That's saying that we've got to watch this closely. Could this be the pattern that we're looking for in the S&P and the Qs? See this? How it just failed to make a new high. Peak C1, C2 is still unfolding. We very often see that peak C1, C2 gets a test and goes to a D. But I'm watching this very closely. Gold, simply put, 1252 is a 200-period exponential moving average support that has to hold over the next 3 days. See what the Fed does. And a push above 1275. It's at 1265 right now, down 3. A push above 1274, actually, would be a positive and say, hey, holding the 9-period exponential moving average and helping the weekly chart. Silver, real quickly, let's just do silver. Silver's had a much deeper correction. And this says to me, silver's acting poorly, and that's a kind of a hint to say that the gold stocks are not acting all that well, and silver's not acting well. Therefore, this is a transitory move in gold. I would not be surprised, and it's funny because the dollar is holding okay, but it's not breaking out to the upside. So tomorrow at 3 o'clock, we'll see. Does the dollar go to the 98.60s, gold pulls back, or does gold shoot up 10 points and all of a sudden, you're looking at the dollar testing as lows in the 96.40 area, 96.51, testing that tomorrow. This is going to be very important. EUR, USD, currency pair, euro dollar holding very nicely. No big deal. It's just sitting there near the highs. And the USD JPY looks to me like it still wants to go over a period of time down to the 108, that's at 110 right now. If it spikes to 111.50 as the dollar pulls back and gold moves tomorrow, that's going to be a big deal. Let's go to crude oil. Crude oil has been holding very well over the last 3 days, but the 9-period moving average has been such strong resistance it hasn't been able to get there. I wouldn't be surprised if crude oil tests the 44s before it tests the 47.80, and it's at 45.67 right now. Basil Chapman, Tiger Technicians Hour. We'll be right back straight off these important messages. Dow's up 50.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So a couple of questions. Actually, a lot of really good comments that were sent to me. I'm going to try to get to them all, but this one I thought was particularly important. Calls in the Den says, Basil, what could be a good entry point for Nugget? You know, this is really tough. I'll tell you why. Nugget, which is the direction daily gold minus 3 times bull, is looking very dull right now. It's just not shining. And all I can say is, let's look. I'll go to the next thing. Bonds are trading with the yields unchanged at 28.69 in the 30-year. You're looking at 22.09 in the 10-year, and the 5-year 17.80, 1.78. The bonds are suggesting to me that there isn't at this particular point tremendous strength, and the reason why I want to do this is because I want to look at this as if I'm looking at inflation. Fed wants inflation. My thinking is that eventually when Fed gets inflation, it's going to say, oh, my God, we let the genie out of the box. How do we ever put this back? But at this particular point, it's not there. We're looking at lower lows and lower highs. That's in gold. It's looking at the yields. So the TYX, the Treasury bond interest rate, 30-year, looks to me like if tomorrow, and this is the reason why I'm saying it's a real tough call. Funnily enough, I do see some kind of a bounce in gold, but I'm also looking at the dollar itching to have a bounce. And it's suggesting to me, because the gold stocks and gold, the XAU and the HUI have not been acting as well as they should. It just seems to me that to position yourself now, all I could say to you is if you are thinking that gold could rally, you could take a very small position, but that's all. It's just too. I'd rather get the trend. In other words, I'd rather wait, miss the fact that gold is now up $12 and say, okay, this is settled. Now I think that gold can try to test the recent highs. I want a position. What if you're long and gold turns down and goes down $12, only to turn around later on? You'll get stopped out because you won't know it's going to turn back up again. So I'm just saying, for me, I'm not playing it that way today. We actually have a position along the TLT, which says that at any point that's going to be taken out. It's almost taken out, but it hasn't been taken out. I think that I said last week, all week, I said this coming week is going to be one of the most important weeks for trend changes for the intermediate term, possible trend changes. Why? Because you can see that the interest rates here, both in the 30, the 10, and the 5, it's so easy for them just to continue the downward motion, lower highs and lower lows. But if there's a turn to the upside, I can see a bounce to the trend line resistance, or the falling axe pattern that we've been looking at in all the different indices. So I'd rather, we're in position for my subscribers. So we're long the XLF, the financials, we're long the Russell 2000. We've got other longs. We've got no shorts at this particular time. Why? Because I missed on Friday. Monday was going to be my day for Friday to go short the stocks. That is, buy short the semiconductors. And I'm not sure I would have gone for the Qs, but I would have used the semiconductors. Instead, you got that move Friday. Now I think there's a counter trend bounce because it was an emotional sell-off. Perfect timing, but it wasn't with bad news filtering into the semiconductor sector. I need to hear bad news. I need at least one of the leaders to say, oops, we miscalculated. There's a little problem. So here, let me go back to the question. The question is on gold. Oh, the reason why I'm saying it's such an important week, look at this. This is the housing sector index, just made a new high. It's gone to a leg F. And the wood, WOOD, gone to a new high. It's recycled. Either this is G/C. So this is a really important week because we haven't had the breakdown in some of the leading sectors that are under the radar, and yet the ones that you can see visually so well, like the Qs, like the SMHs, they right there. I don't know if they're going to make new highs. I think they're in the process of starting a big consolidation. So that tells me that if I look at crude oil, and crude oil says, you know, from this level, you can have a bit of a bounce, but the weekly chart is still terrible. The monthly chart is terrible. To get a really big move, crude oil down 34 cents, I need to see crude oil moving up into the 47.50s. It's almost like 2 points up from here. I need to see the dollar. If crude oil goes up, then the dollar should tank, and the dollar should be down to the 96.30 level. And right now it's at 96.96. So I think we're on the cusp of a potential change in trends in many of the indices, and some might just keep going to the upside. So to answer your question, I don't think I'm the one right now to give you the answer to that. I'm not in the work that I'm doing. I need to see a move on gold of about 7 points up or 7 points down at 2:30, 3 o'clock tomorrow after the Fed talks. And then I'm going to be much more comfortable. And it needs to hold into the close. So forget it. All I can say is this. If you think that gold is going to move, I wouldn't get too carried away. But if you want to buy a small position in a 3 times long, fine. But I don't know how you're going to put your stop in. If you're able to put it in and have the stop be triggered, you know that the stop will be triggered in a split second. It won't gap away from it. I'd say fine. But I'm actually just going to wait. Because I'm thinking that there's going to be a trend of a longer duration. And let me just go through this because it's important. INDU. This is almost always in leg E or F, where in the Chapman wave methodology, I'd be starting to put shorts on in the Dow. This is the first time, I can't remember in how long. And one of the reasons is we're trying to see how far the IWM, the Russell 2000, and let me just see if the MDY is copying the Russell 2000. Yeah, look at that. MDY is in leg E. So everything's sitting here to say, you know what? The Fed doesn't usually, isn't a provocateur. It doesn't really change a trend. But if everything's coming together that I'm in leg E or F in some of the daily indexes, it might be coincidental. Because why? What would happen if MDY, the mid caps, trading at 322, tomorrow at 3 o'clock, is trading in the 324 area. The Dow is trading in the, did I miss that? Yeah, the Dow is trading in the INDU, up 130 points in the 21,430 area. It breaks out. I have to say, hey, that's a recycle. So all I can do right now is say that I'm not interested in the very big high techs or the NDX 100. Maybe they can have a bounce going back to a little bit below where they were on Friday. But my thinking here is that there's a problem. I like the fact that one of the weakest sectors, the financials, are actually doing very nicely. It's nice because it keeps up that rotation. So all I can say is I will go through these. When I get back, with the questions, I'm going to go through the different sectors, and I'm going to tell you what I'm looking at. Okay, be right back. Dow's up 61, S&P is now up 566. Basil Chapman, Tiger Technicians Hour, holding long positions. We'll be right back. I don't know how long, but we'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, folks, a couple of things I want to just talk about. I want to get a couple of things on the record once again. Number one is, in a bear phase, and I always say this, there's only one thing that keeps prices down. Otherwise, the general trend is like a cork in water. The prices want to rise most of the time. The trend changes when any news is considered bad news by the market. It keeps filtering in. It starts off once, then 3 days later, then 2 days later, then all of a sudden it's accelerating, or it's 1 week and then nothing, then 3 weeks later, and then 2 weeks, it just accelerates, right? But the market has to respond negatively. That's number one. And number two, and this is absolutely imperative, is that the volatility index, which is now 10.61, down 85 cents, has to start pushing higher. The theme of a bear phase, and I don't care whether it's a daily, a weekly, or monthly, the theme is that prices open very weak in the futures, then there's intraday rallies, and then towards the mid-session, you start to see lower lows and lower highs, and then the market closes down at the lows. Dow is sharply lower, S&P's down 12 or more points, starts all over again. At night, there's an attempt to rally, but no, the futures open sharply lower. We have not seen that at all. So that's going to be the phase that I'm expecting to come at some point for the more intermediate term consolidation. I think it's very soon, very close. The way I'm looking at this, I don't know if the S&P is going to make its leg D, but other things are starting to show that there is weakness in a rotations with former sectors acting extremely poorly now that they were leaders and they're not anymore. And you've got other sectors that are just suddenly showing strength. And that's how rotational markets work. Okay, that's number one. Number two is, remember I spoke about Mozart. I spoke about that period where you go to the Museum of Fine Arts or wherever it is in your city, and you're looking at all those paintings from the 1700s and 1800s. You actually look at the pictures of any one of our great statesmen, and you see all these pictures, and the men are wearing these tights, and they've got these fancy things. It must have taken them like an hour and a half to get ready, and they've got hairstyles, and they've got the cool little cookie on the top, and all sorts of things like that. And I said, I'm not going to comment on like or dislike. It's got nothing to do with it. What kind of era produces that kind of dressing, that flattery, that kind of egotism, that kind of hubris, that people take so much time to look good? We're in that time right now, right? Tattoos, those are men's hairstyles are becoming elaborate. I mean, before, go down to a shower, come there, and that was it. Now you've got all these different styles. At some point, I hope to do a webinar talking about these styles, how it affects and effects the market, the economies, and a whole bunch of factors that I think is this particular era we're in. Okay, I got those things out of the way. Now, what I want you to talk about is just to come back to the market. I want to show you something. The IYT, Dow's at an all-time high. The IYT is confirming up legs, confirming the rally. I'm sorry, confirming the rally, not the all-time high. It's in leg C now in the daily chart. The weekly chart is this cup formation. We are seeing these cup formations everywhere. And cup formations in the weekly chart, when they start to work, they tend to repeat. So that's very positive, and that suggests that before this is all done, that is this particular bull phase, the IYT should go to a leg D in the monthly chart, and that would take it above 173.88, the high that was made in March. And then I think we've got to start getting really, really cautious. Either that, or we're going into the acceleration phase. The cautiousness would be if the semiconductors, the Qs, the XLK did not have a big pullback. Instead, just went sideways, consolidating for 3-4 weeks without breaking down. I don't want to go through the Netflixes and Amazons. You can look at yourself. They all have come off their highs from the other day and are not at the highs again in the 2 days we've had since Friday. So now let me go to this. Brent oil, that is BZ. Let me put BZ and just let me check it out. Is that correct? No, I can't do BZ. What are we looking at there? BZQ17, BZQ17, there it is. Okay. See, this is the pattern. I could do all those oils. I could do. They've all got this uppercase A, that is the Eiffel Tower, straight up and straight down. Unless tomorrow something spectacular happens, the dollar really takes a dive, and crude oil, which usually, not always, but usually very often has a counter trend rally to the dollar, that means that the crude oil will have, so Brent trading crude oil, Brent crude oil, last day, I don't know whatever it says, trading at 48.05. It needs to be up in the 49.30 to 50.30 area. And then I'm going to say to you, that was good. Now crude oil can rally. Okay? So yeah, okay, I'll look at XLE. That's energy, S&P, holding nicely, is up 28 cents at 67.18. That is a nice leg off the low. We've seen this before. This time, though, you've got to see that the weekly chart at 4 o'clock closes decisively over the 67, what is that, 67.43 9-period exponential moving average. And if it does that and XLE actually closes in the 68.30 area, I'd say, whoa, that is very good. Yes, P in the den. That's often false. Crude oil and dollar. I'm going back to the history that there are many times that you get a phase where crude oil, but it hasn't been happening. That's actually what I mentioned yesterday or the day before, that gold and crude oil have been pulling back. The dollar also hasn't been doing anything. So this is a little different, this particular period. When is it different? It's different when things don't do what they normally do. So I wanted to point that out. Thank you just for reminding me. I was going to say it, then I forgot. Now let me show you something very interesting here. Within the context of markets, look, the HG, the high-grade copper, pulling back again. We've been talking about this trading range. Gosh, it looks like the IBB trading band. Look, up, down, but it's all within trading bands. And these trading bands are going to get the big test coming up. Now, I just want you to quickly go to, I had questions about it, so let me go. W is wheat, continuous contract, had a big spike to a leg B, hit the 200-period moving average, plummeted, and it too is in a trading band. Look at crude oil, look at soy, I'm looking at corn, continuous contract. Hits that left side, right side price time match in a peak C at 393s from February. Goes to 392, fails, comes back, hits the 200-period moving average. Still, and that's why this week is so important. It's important only if we look at, now, and let me give you numbers, okay? The other numbers. It's important if gold, trading right now, down 3 at 1266, either breaks above 1282, really shows strength tomorrow afternoon, or breaks down and goes to the 1252 area. Crude oil, trading at 45.75. It needs to get into the high 47s. And then I'll say, whoa, that is very nice. If it breaks down, it's in a test of 44s. That's why I'm saying this is such an important week. It's the result. Normally I like to say it's an important week, but this is a week that says breaking boundaries is going to be really important for the intermediate term. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So I had a question about CTL. So those are the parameters. And the way I'm looking at, so here's the other thing. Friday, the market should have been down. Dow should have been down 135 to 150, easy. The S&P, 20 points down. The rotation took effect. When have you seen the NASDAQ take such a dive, knock out 2.5 months worth of prices, and the Dow closes up at a record? I mean, what are we looking at here? We're looking at the rotation. And that's the reason why I don't want to be short right now. I'm prepared to miss the move, not to be on the wrong side. Okay? I'm trying to make it as clear as I can, because looking at the triple yield chart, and with the fact that wood, the global timber and forestry ETF went to new highs, the Philadelphia housing sector went to new highs. I don't really want to second guess, because the Fed can say something, but look, the Fed has said whatever they wanted and yields have gone down. And something says to me that the Japanization of our bond yields isn't going to go away for a long time. That's just the way I'm looking at it. All right. I've done that. XOP. XOP is, in fact, the, that's a nice move. So this is the Spider Oil and Gas. I had a question about UNG. Where did that go? Who gave me that question? I got it a moment ago. Victor. Oh, what a joke. I mean, this is just what a coincidence here. So the 2 questions came at the same time. So XOP, which is the oil and gas exploration, what a coincidence, is showing nice energy to the upside in the daily, leg A, but it's done this before. What would be different this time? The only thing would be price movement that holds, because the technicals are kind of how they were before. And all I can say is that the XOP at 33.49, this is very nice action. If you're long, I would say you can stay long. You just got to have a stop in for tomorrow. But the way it's acting would suggest to me that if at 33.47, if tomorrow afternoon it doesn't break 32.81 support, instead it goes to 33.75 or higher and holds, That's going to be a good sign. And then the UNG, I wonder if it has pretty much the same. No, the UNG is breaking down. So UNG is United States Natural Gas Fund. My thinking here with natural gas is I really think that I haven't studied it. I'm just going from hearsay. I'm pretty sure that there's a glut of natural gas. It just seems to me, I don't know how you can't come to that conclusion. So be careful. So the oil and gas that's made up of the stocks in the oil and gas sector, that seems to be working right now. You don't have to have the big rally in UNG. But let me just show one more time. Within the context of, let's see. Okay, within the context of looking at ExxonMobil, there's a question. Where did it go? ExxonMobil. Well, I typed into the den by mistake, XOM. That is a very nice move. But I don't know if it's the move to go higher based on the monthly chart, even based on the weekly chart. So I'm just going to say to you, I need a day or two, and I'll probably on Thursday be able to give, for myself, much more clarity. Meantime, we've got our positions. They seem to be working. Just want to stay in those positions right now. So, Victor, I'm just going to say to you, the UNG, I don't see anything. I can see at some point there'll be a snap rally. It's at 671. It's getting real close to at least a snap rally, which can go from 671 to 695, 708. And if it holds that, that's different. Then all of a sudden you're looking at the H pattern, the weekly, becoming a lowercase m pattern. There could be a bounce. It's real tough. We're right on the cusp here. So next question was statement of the Qs. QQQs had the biggest two-day decline since December 2016. Yeah, and in fact, look at the Qs, 1, 2, 3. Look at the Qs. This bounce back, having made a lower low after Friday's terrible candle, and then closing at the high, and then following through on the upside today, when the technicals are poor, is saying you've got to look at the next time frame. And the next time frame says, the weekly chart is just starting to show deterioration of the technicals. So that says to me, upside is limited in the QQQ, the SMHs, and I think the XLK. Let me get the XLK. Yeah, and the XLK. Now I can put a down arrow. There's a daily sell mode underway, not yet weekly. So this Friday is going to be very important. Whoa, there's a lot of stuff we had to go through. Now, this is going to be very interesting. When I went through a bunch of the charts, actually all the time, every free moment I've got, I'm going through charts, I'm looking at stuff that I don't normally look at. Yesterday I mentioned the IBD, where did it disappear to? Is it here? Yeah, big cap, top 20. All of a sudden I'm looking at stuff that I haven't looked at before, looking at MGM, which is number 2. MGM had that big peak D sell-off, trying to rally. Weekly is an E. And I'm going through these charts over and over and over. And almost all of the daily to the weekly stocks that have had the best moves are showing wear and tear. They're showing that maybe they need a little bit. Look, the technicals in MGM Resorts trading at 32.12, up 53 cents, are really good in the weekly chart. But the daily says, it's going to be tough. And then that will impact the weekly. And the monthly is in leg D. What I'm saying is, I'm looking for fresh names because I think the fresh names are the ones that are going to work. And could be completely wrong. Where was the question? Yeah, could you look at Facebook? All right, Facebook. Facebook plunges to the 18s after its IPO and then hits 155.59 the 9th of June 2017. That's a huge move. Peak E, daily. A potential peak F. It could have recycled, instant restart, although everything about the stochastic and the MACD says very good, but it needs a timeout. Is it a big deal if Facebook goes from the 150s down to the 142 to 133 area over a period of 3 to 4, 5 weeks? I don't think so. The monthly chart's still looking outstanding. So that's the way I'm trying to look at the charts. I know it's tough, but I'm trying to show some patience. I'm also trying to show some aggressiveness in trying to get positions and try to anticipate. And it's kind of worked out in many ways. We'll see if by the end of the day it works out, because I think that gains today are going to diminish tomorrow as everyone goes into a wait-and-see attitude going 1 o'clock to 2 o'clock tomorrow. So you've got to be prepared for that. And then a sudden big move. All right, I've covered those questions. The call on the XLF 21, that's 20 on the 21st of July, 25 strike. Ooh, huge number. Okay, well, let's just look at the XLF. Trading at 24.47. Yesterday, the doji candle, a long-legged doji. Today, it's got another little doji candle open and closed. It hasn't closed yet, but it's trading right now at the same price it opened at. This is going to be that H. Look at this. The same pattern we were looking at before. The cup, the successful H that goes to a cup formation in the weekly chart says, you know what? I'm trying my best at 24.47 to get to 24.30, the high of March the 1st, 2017. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Don't forget, great programming coming up, everyone, right here at TFNN. So CTL, CenturyLink Inc., trading at 26.73, up 13 cents. I saw it go by yesterday on the ticket. It was up a point and something. I thought CTL. I thought it was a name I was familiar with. I'm familiar with the name. I just don't remember ever doing an analysis of it. But I quite like it. But it's in leg D in the daily, and at 26.73. 26.06 is the 9-period moving average. I would prefer to see a slide 26.20 to 25.50s and then consider what I'd like to do. It is looking good. It's, excuse me, broken out of the congestion area where 26 was a resistance, held above the 24s for quite a while. I like it. I just think that, here's a way to do it. I know that you're a longer term position player. So I'm going to suggest right there, 2671, if you want, saying to yourself, you know what, I am expecting it to pull back, maybe even a point and a half. But this is one that's on my list and I'd like to own it. If you intend that this fits all your other criteria, you're only looking for your entry point, you could have a few positions. You could start here at 2673 saying, peak D, doji candle, it should be pulling back very soon, but the technicals are still strong. I don't want to miss a move that goes to 2730 because that's raised the base. So you could start right here at 2673, but I would only do that if I was planning to add between 2620 to 2550s, somewhere maybe 2580. I'd add another position. And because it's acting very well and it hasn't broken 24, I'm talking about if it's in a month's time, it hasn't broken 24, still, in fact, hasn't even broken 2550. It's just holding very nicely. I could then think of even another, so 3 small positions, maybe that's another way to think of it. Hope that helps you. But if it was me, I would just say I'm going to have patience. If I put it on my watch list, I'd like to see it come back to the low 26 area, high 25s. Okay, good. Now, let's do a couple of things here. The VIX index, VIX, we'll do more tomorrow because tomorrow's the day. But the VIX index just hasn't been able to hold gains. It just does it, and then it comes back down again. And that's showing buying pressure. I don't need to see that to say buying pressure. I'm looking at the Dow all-time high. When just Friday, there was a massive sell-off. So I have to do this. I have to look at it and I say, you know what? Applied Materials, one of the leaders, having a tough time now over the last 2 days since the turnaround at peak E on Friday. So that's just an area I'm going to avoid. What are the areas that are looking good? Well, areas that are looking good, let's look at Bank of America, doji type candle today, holding very well. If it becomes favorable to the banks because rates are going to rise from tomorrow, these are the guys that are going to do very well. And we'll be watching them. If you're looking at Federal Express as a way of looking at the IYT, hey, wait a minute, leg E and the daily, but the MACD is still very strong. Stochastics at 96%. It could flatten out, but it's only a leg C in the weekly chart, a leg D in the monthly. So I'm looking at this and I'm saying there are so many overbought areas that it's the rotation into areas that have been weakest that might benefit the most starting Thursday, Friday, Monday, Tuesday of next week. And that's really what I want to do. I want to be looking to see what has the potential to do very nicely while other sectors take a well-deserved breather, kind of making it simple. All right? So check out my opening call. It's daily, very comprehensive daily newsletter, and I give you all the parameters every day. In the Traders Corner, I go through many of the indices that we might not even be trading. And I give the parameters to watch and what we're looking at. And of course, every weekend I give a lot of chance for you to study and peruse stuff we have, stuff we're looking to buy, and stuff that's just very important. Basil Chapman signing off for us today. Tuesday, I'll be back later on with Tom O'Brien. Have a great day. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.